Tim Cook said at the hearing that the Irish government gave us a tax incentive agreement, and he talked about a special arrangement. And his head of tax then, when was pressed about what that meant, said that we negotiated a tax rate which meant that our tax was calculated at less than 2%. So, first of all, was Tim Cook wrong when he said that he and his company had negotiated a tax incentive agreement with the Irish government, and was his head of tax wrong then at that hearing when he said that that negotiation meant that we could calculate our taxes at less than 2%?
I don't think you were here when I made my opening remarks around Apple. First thing is that I'm bound by taxpayer confidentiality in relation, and I'll come to your question, but I just want
confidentiality. But we're talking here about
no, but there's also a legal procedure. I just want to repeat that because everybody was.
I read your opening remarks.
Yeah. Now, the issue around what Tim Cook said in the Senate hearings is absolutely, in Revenue's opinion, not correct.
But it's very serious to accuse the head of a multinational company who was given sworn evidence. No, with respect, if you let me continue, this is a very high-powered committee in the US. It is illegal to give false testimony to a US Senate. If we have the head of revenue or somebody in revenue who's in a senior position in this state who is saying that Tim Cook gave false information under oath, or gave incorrect information, or maybe his interpretation of what he said, whatever way you want to put it, but he gave wrong information to a Senate hearing, that is very, very serious. And it wasn't just him, it was also then the head of tax within Apple who went further and said that this arrangement meant that we could calculate taxes at 2%. So they were under pressure at that hearing, and they said what they said. So I think it is very serious then when you say, well, and you may be correct, but when you say that that information was incorrect, I think that's serious for them as a company. It raises more questions then in relation to this issue. But do you accept that that's very serious for them if they gave incorrect information to a Senate hearing?
Deputy, I can only talk about what happened in relation to Revenue and Apple in 1991 and 2007. And I can see how it can be presented because they're looking at it in the context of a global rate. But we were only engaged in the attribution of profits to the Irish branches. That's what we were dealing with. I understand
that. No, but that's not the point. That's not the question I'm putting.
I can't answer.
I'm not asking you to answer that.
I can't answer whether what was said in the Senate hearings was right or wrong.
But you just said a second ago.
I can only say what happened in Ireland
and
in the Irish Revenue. And the impact of that is that he was wrong.
Okay.
And I can't repeat it in any other fashion.
Okay, but I think that's serious. That's acknowledged. So I think, to be fair, you've acknowledged that. And I think we should come back to this at some point anyway, Chair. We can't give that issue justice when we're trying to deal with all the other issues that we're dealing with here. So absolutely, we've a lot to get through.
There is also a legal process in place. Just that is important.
Yeah, I understand.
So we will be limited.
A difference of opinion doesn't mean one is accused of the other being wrong. People are entitled to different opinions. I just make.
Well, with respect now, Chair, we're not talking about differences of opinion. We're talking about statements of fact that were made at a Senate hearing under sworn testimony when they said two things that somebody in Revenue says was wrong. And that's not just a difference of opinion, now, with respect to yourself. But anyway, we'll park that and we'll come back to it. I'm one of those people, Chair, that you mentioned earlier that needs things explained very simply to them. So I'm a bit like those people you talked about who listen into, if there are people listening into this morning's hearing. So if Mr. Cody could bear with me, I just want to get clarity on what was in the CNAG's report in relation to tax complaints. And I'm just looking at the headline figures, because the headline figures are, if I'm correct, that 39% of taxpayers that were audited between 2008 and 2015 were found to have underpaid. Is that correct?
In a sample.
In a sample, yes, in the sample. The average of unpaid tax was 18,500. Is that correct? And that in 2015, of 270 random samples that were finalised, 170 people or companies were given a clean bill of health, which means that 100 were not. Is that correct?
Yes, I think so, Deputy. Where are you quoting those numbers from?
It's actually from media reports, so I'm just seeing that the media reports correct.
Okay, well, I'm not quite sure which media reports you're quoting from, but
if but you would be aware if the information was correct or incorrect.
I'd have to go back and recalculate maybe some of the numbers that you've quoted there, because I don't think they're figures that are actually quoted in the report.
Okay. It also says that there was, of the 170 companies, of the 100 companies that were not given a clean bill of health, 5 of the randomly selected companies or individuals were found to owe over 50,000, and 7 were found to have owed between 20,000 and 50,000, which means 4.1% then of companies or individuals that were audited were found to have a tax liability outstanding of between 20 and 50,000, and a further 3% over 50,000. And the overall figures anyway, I think we all accept are high in terms of the 35% anyway. So I just want to establish the facts first. Okay. So obviously that is of concern, because this is just the sample. And it goes back to what was said earlier by Dr. Connolly, the difference, what's the tax gap. My understanding of the tax gap, and if this can be clarified for me, is that it's the difference between what is paid or what was paid and what should be paid if everybody was in full compliance with the tax code. Is that correct?
Yes, that's what the tax gap is. Okay.
So when we have a report then which says that 39% of taxpayers that were audited between 2008 and 2015 were to have underpaid their taxes, and this was again just the audit. What's been said in the report is that it's difficult then to get a clear picture of exactly what the tax gap is. In other words, if we had full compliance, what lost revenue there is to the state. Is that correct?
That's effectively what I'm drawing attention to.
Yeah.
Just the figure of coming from the random audits.
Yeah.
Effectively, what that's looking at is the audit gap rather than the tax gap.
Yeah.
So that's effectively people who have registered with revenue as taxpayers. Yeah. So if you look just on that diagram 15.1, I wonder could we just bring that up more fully
what
on the screen? It's on screen in front of you there.
Oh, sorry. Okay.
Yeah. But if you just look at the green panel in the centre, the audit gap is the relationship between the tax paid by taxpayers who are recognised and registered with revenue. The tax gap is a broader definition.
The difference between tax collected and tax liability.
The difference between tax liability, yes, in terms of people who are registered with revenue. But there are obviously economic agents who are not registered with revenue.
But if we stick with those who are registered for a second.
And that's what the random audit is focused on.
And that's what I'm focused on. So what we don't have then is any sense of how much unpaid taxes there is year on year because of underpayment. But we can say with certainty that it is a sizable amount of money. And it is then crucial, because it does then give us give taxpayers and give policymakers, because we're here, we just had a budget, we have very difficult decisions to make around investment and tax and so on. So we at least expect that taxes that are paid and dues should be paid. So why is it so difficult then to calculate what the total, or even have some sort of estimation as to what the total lost revenue is, that tax gap? Why is it so difficult? And why is it then that that's one of the recommendations that is only part agreed? Is it because revenue, and this is for Mr. Cody, believes that there's no real value in having that data or putting the resources into it, or is it that it would just take a lot of resources to actually calculate the figure, or is it that it's complicated doing it? What's the problem here?
There's no international acceptance that tax gap analysis is the best measure. Tax gap analysis is arrived at in a number of ways. Sometimes it's taken from the top down, so you use central statistics, GNP figures, national accounts figures, and then you work out a theoretical gap. But the reality is that tax evasion, shadow economy, is by its nature hidden. So it's always an estimate. The country that has gone furthest down the road of tax gap analysis is the UK. They do it annually, and it is their major measure of the success of the organisation. And what happens every year is that HMRC arrive at a tax gap analysis, which is subsequently amended when national accounts figures. So you have an agreed tax gap for 2013. In 2014, that's changed. 15, it's changed, depending on what happens with national stats. Some of the issues around identifying the top-down approach is that there's an estimated figure put into national accounts for the shadow economy. And then you work out what the shadow economy is based on an estimate that's gone into the overall figures. So sometimes you're actually going around and you're actually
But even if you strip the shadow economy out of it, we're talking about, as I said, people who are actually registered.
Well,
so we've done a sample of people who are registered for tax. We can see that there was 35% where there was non-compliance. Yeah. Surely then there would be value in knowing, if there was full compliance, what the lost revenue is, especially when we have to make tough decisions as taxpayers.
And as we discussed,
on behalf of taxpayers as politicians.
As we discussed earlier, we're looking at revising the random audit programme to look at how we can better measure the audit gap, because at least that's a clientele that we have. As it's designed, we don't think it's actually big enough to get a proper view of the audit gap. But I think it's important, while there's a consistent figure of 35%, the majority of cases, 80% of cases, had a yield less than €2,000. The yields and underpayments in tax arise from a lot of reasons. Some of them are interpretation. Some of them are just pure error and mistake. So we have classification of technical error, innocent error, carelessness with significant consequences.
And I accept all of that, Mr. Cody, but carelessness and errors still result in taxes being unpaid.
Absolutely.
So whether it's intentional or unintentional, we end up then with taxes not being collected. So does this tell us that there is potentially a problem with the self-assessment process?
I think that when I read the draft of the Controller's report in the first instance, and I saw a figure of 2% for the audit gap, I kind of wondered myself, was it accurate? Because I think if we as a revenue authority have managed to get 98% through the self-assessment system, that to me is nearly better than. I was kind of going to say the random audit programme is perfect, and we'll take that audit gap at 2%, because if it's right, our risk-based audit programme, which we collect significantly higher averages, significantly higher hit rate, you would suggest that if you apply our risk-based audit programme to the audit gap, that we at least collect half of it every year to our risk-based system. And I suppose at one stage when we were looking at the figures, if we managed to do more risk-based audits, I kind of feel that at some stage we might actually collect more through the risk-based programme than the audit gap displays from the random programme. And then I don't know where we'll have managed to collect over 100% of the tax due. And I don't know where that will leave us. Because that's the possibility.
Yeah, I think there might just be, I think we need to focus on the tax foregone in a particular year. So I think the targeted audits are looking at multiple years and relating collections for multiple years to the tax foregone in an individual year is probably a complication there. I think we have, in a number of reports over a number of years, we have, if you like, championed the importance of the random audits to try and give us exactly some sort of a fix on what is the level of tax foregone in an individual year. And essentially, I think it's useful to revenue, who can then say that the level of activity we have on targeted is either is capable of being expanded and yielding more revenue. So I think it is, to me, it is a useful technique, a useful tool, a useful estimate. It is valuable over time. So to see that if there is a deterioration, let's say it goes to 3% or 4%, as it might do, that at least you would then signal we need more effort on targeted.
Breakdown then of the random sample in terms of small traders, individuals and companies, say bigger companies. So what?
It's a random. I outlined it earlier. It's a random selection out of the self-assessed case base. So there's about 850 between individuals and companies. It's purely random. It doesn't include PAYE cases. And I think that's one of the flaws. And I outlined earlier that because of how the self-assessment works, there is a lot of non-trading people in the self-assessment system that aren't really businesses at all. And that's why I think that what we're really interested in doing, and we're doing a lot of work on segmenting our case base to try and say, here are kind of traders that have trading activity, and that we could get a more sophisticated random audit program. And it's actually why we said part agreed, and what I've said and what I've undertaken here is to work on improving the audit gap, because the audit gap and the random audit program is achievable. In relation to the tax gap, what we would much prefer is sectoral approaches, as we talked about earlier, focusing on things like oil or focusing on tobacco, where you can actually hopefully say, because they're excisable goods, they're properly controlled at the very top of the chain, and you can say, where are their leakages?
Yeah, I think that's good to hear. Just want to deal with one last topic, and it was raised as well, which is Section 38 and 39 and organisations and charities and their compliance with revenue. We had some discussion on this because we've had a number of HSE audits which have not been good, and I won't go into any of the organisations themselves or name them, but I did put down a parliamentary question just to get and capture exactly how many revenue interventions there may have been in respect of charities. So for the years 2007 to 2016, revenue conducted almost 7,500 debt management interventions and in excess of 1,600 compliance interventions in respect of charities. That to me seems very high. It's 177 compliance interventions every year since 2007. It goes on to talk about the exemptions that are in place for charities, but we have seen from some internal audits that there was issues in relation to salary payments that were not taxed or subject to payroll taxes, where there was payments made of untaxed payments of salary made to employees who were working for some organisations to other organisations. So there's all sorts of issues here. Are you concerned about that, and would you see those figures as high, 7,500 debt management interventions and 1,600 compliance interventions in that time period?
Debt management interventions.
And that's again, sorry, only a sample. So if that's only a sample, then how many more interventions would there be if this was applied to all the charities across the state?
Well, debt management interventions arise when there's a debt issue. So somebody hasn't paid their POE, their P30. Most of the debt management interventions in relation to charities relate to POE. So a debt management intervention, if somebody is late, it's driven by the non-compliance that takes place. And there probably is a case that, and it's a feature of probably charities when they start getting into financial difficulty for whatever reason, POE is one of the early triggers. And that applies.
And I accept that, but what we then want to get to is our job here is to make sure that we improve compliance.
Yeah.
So then we look at the processes and the failures.
Absolutely.
So if there's a failure then, and it is on the, say, the PAYE side or the payroll side, what improvements in process is revenue looking at to make sure then that we can avoid these type of interventions and that there's stronger compliance within the charity sector?
There's 8,160 bodies that are trusts that hold the charitable tax exemption. And we make, like every other sector, we make risk-based interventions having regard to risks that arise. We have a charity section which monitor and control on an ongoing basis, and now with the charity regulator we engage with them. There is not significant tax risks in the charity sector, just the nature of the business. They're not liable to income tax, corporation tax. They may have some VAT, but it's generally not. But the big one is payroll. Obviously, there are rules around employees and directorships, and that's an area we pay close attention to. I suppose the interesting thing that hasn't got any coverage yet out of the budget speech, and this is relevant to PAYE and charities, but all businesses, is that the Minister announced that we're engaged in a consultation process about the modernisation of the PAYE system and a move to real time, and that we have launched that. We published it on our website on Tuesday, and we're going to engage with payroll businesses. And the key issue there is that what it will do is it will give employees control over their tax affairs, which right now any employee, charity, public servants or any business has no control over their own pay and tax, their own tax details through the year. They're fully dependent on the employer and the end of year process. So in a way, if a business is running into difficulty, the employees are often the last to know, because they don't know that the real time situation isn't there. So I think that from the point of view of this committee and improving the overall compliance, I think events over the next couple of years on PAYE modernisation are really important.